Back in 1983, I was invited to purchase a 15% of an existing brokerage house. We basically created a team to participate in the global market because there were online platforms that were available already. The 30 to 40 traders today will become team leaders, and from there they will each be assigned 4 to 5 members, and they will be the one to help us grow this business. One of the advantages that we have in being a leader is that you need to train your people. As you train more people, you become better, and rules are drawn, more accountability. That's why we ask most of our team leaders to help us teach, because the more they teach, the better they become.
So the most difficult part about our industry is really being able to train traders and be able to not just train them to a point where they're profitable, but to be able to replicate them. I think that's where the difficulty really lies. And that's what we have been doing here at CTS Global. We've been training traders for the last 30 years. That's where I find the most joy, in being able to see how all of these traders have grown with me, have been able to now train their own trading team and to be able to share their experiences. I think that is so satisfying. In any proprietary trading firm, there's always a risk of loss in terms of the asset. But that's where we have proven that we have the track record to be able to go out and to continuously outperform markets on a year-to-year basis. And you can see that in our numbers over the past 8 to 10 years, that we do have that track record. And that's something that we feel that this is our core competency, this is our competitive advantage. Trading in general is a skill that can be used anywhere in the world. I think that is the emphasis here. And our exposure to the global markets over the past 20 years allowed us to really build an expertise that we were able to bring home to our local capital markets. And we want to take advantage of that here.
Okay, so good afternoon, everyone. And thank you for attending the trading participant and retail investors briefing in relation to the initial public offering of CTS Global Equity Group, Inc. Before we start the presentation proper, we would like to remind our attendees of some general meeting guidelines. So for good order, we'd like to remind everyone that this session is actually being recorded. We'd also like to encourage participants to please find a quiet space to take the call. This is to ensure that you can hear the presentation loud and clear and without any distractions. Please turn off your mic when not in use. Before typing or taking another call, please ensure that your devices are on mute. Check the audio quality of your device. If preferable, you may use your earphones or headsets for better audio quality. We'd also like to recommend to close any unnecessary background application for better video quality. In case you have any questions, we will have a Q&A session at the end of today's presentation. You may type your questions in the conversation box and we will address them during the Q&A session. And with that, we'd like to begin this session's briefing. I now turn it over to SB Capital Senior Director, Mr. Dennis Du, for some opening remarks.
Thank you, Pam. Good afternoon, ladies and gentlemen. On behalf of CTS Global Equity Group, Inc., we are pleased to welcome you to this presentation to the PSE trading participants and retail investors on the initial public offering of CTS. My name is Dennis Du, and I am a Senior Director at SB Capital Investment Corporation, the sole issue manager, book runner, and underwriter of the CTS IPO. We are excited about CTS prospects, especially as it is poised to take a more active role in the global equities markets. Yes, we are living through interesting times, but it is during these times that the greatest opportunities present themselves. We believe that CTS, with its investment analytic models and risk management platforms, is in a particularly strong position to take advantage of these times. Joining us today are Mr. Lawrence Lee, the CEO and President of CTS, and Mr. Edmund Lee, the Chief Finance Officer of CTS. We hope that after this briefing, you gain interest in investing in CTS. Thank you, and I now turn you over to Mr. Lawrence Lee. Lawrence?
All right, good afternoon, everyone. I just want to thank everybody for taking the time to come and listen to our organization and what we do as a company. All right, so we're CTS Global, formerly known as Citi Securities. So can I skip 2 slides forward, please? So I'm just gonna run through a few things. So I'm gonna start with what we do as a company. Can you go to the next slide, please? One more slide. Yeah. So most of you guys know of who we are as Citi Securities in the past, and 3 years ago we rebranded, and we are now CTS Global Equity Group. And for us, there's a big misconception on who we are, and because our sister company, COL Financial, as everybody knows, a lot of people are asking, why are they listing 2 different brokers? And that's right, we are definitely a broker, but the purpose of CTS Global is vastly different from the purpose of COL Financial. COL Financial is a stockbroker. They're a commission generating business, holding business, and that's really all that's the primary purpose of their organization. We as CTS Global are a proprietary trading firm. That means that over 90% of our revenues come from the active trading that we do in markets all over the world. And the great thing about that is that we aren't a single individual that does all of the investing and trading all over the world. I think that's another misconception that a lot of people have with us at CTS. And first and foremost, I want to be able to talk about who we really are. So we have a platform, we have a framework called the FTSR. So this is something that our school, the Killam Trading Institute, really has honed over the past 40 years. This is something that we teach, and this is something that we allow our the students who want to learn about short-term trading to come and participate and to learn from us. And the great thing about this is because we've been building traders for the past 30 some odd years. And all throughout the entire period, we've had our ups and downs. We've had to be able to learn the nuances of building a trader. And ever since we've had the Killam Trading Institute, a lot of it has been streamlined. And we've really cut down a lot of the time that it takes for us to build traders down to a very significantly shorter time frame. So we treat each and every one of our traders like it's a store. So like any franchise model, you have the franchisor and the franchisee, right? And for us, the traders are like our franchises. They're like our stores. And we support them with our research. We support them with our risk management protocols. We support them with our macroeconomic calls. And we support them in terms of trader development. And each and every one of them, the greatest part about this is because each trader has an unlimited amount of potential. And this is the part that we get really excited when we build traders, is that the cost of the trader remains the same, regardless of the capital that they're capable of managing. So as the trader continues to learn, continues to grow, allows them to manage more capital, and eventually allows them to train even more of their own people. And then that could just continues to grow, so on and so forth. So that's why for us, trader development has always been the #1 priority. And we continue to allow ourselves to be able to make sure that we train them well. We are able to scout, we're able to develop and train them, and we're able to scale them. And this is the reason why we want to list on the exchange. It's because we feel like in order for us to continue to grow our trader base, we really need the capital. Because right now we're full to the brim, right? So we're fully utilized in terms of the capital that we have, and we feel that we're in a position that we can actually scale these traders significantly. So not just an individual trader, so increasing their portfolios, but actually the amount of traders that we want to be able to put onto the team. Right? So We have a fantastic community here that we continue to build upon. The CTS community is an incredibly strong infrastructure where we continue to support one another in terms of research, in terms of risk profiles, allowing us to be able to guide each other throughout, to be able to navigate even difficult markets, right? And extending into the Kilum online community, which some of the members here are from. And we are grateful for each and every one of you guys, right? So I want to highlight this first, is that we are a risk first, profit second organization. I'm going to talk about that extensively moving forward. But what we do is really allow ourselves to be able to diversify how we make money in global markets. And that's something that we spent a lot of years really being able to make sure that we have that level of diversification. So we are diversified in terms of strategies, in terms of direction, in terms of asset allocation. And we have, of course, real-time risk monitoring, and something that I'll talk about extensively later on. Okay, so we take all of these intellectual property assets and we pour them into our trading division. Currently, we have about a little over 30 traders that I feel are incredibly capable of making money in global markets. And whatever is made from these traders, we share with them, and we pour the rest back into the organization and continue to allow our organization to grow and compound those returns. Okay. Yeah. So next slide, please. All right. Yeah, so you guys can read this in terms of our licenses, right? So next slide, please. All right. Next slide, please. So all of this will be posted and for you guys to be able to take a look at moving forward. So can you go to the company profile, please? Yeah. So just background in terms of the history. City Securities started in 1986. We were an original stockbroker over the phone, and we do have the bulk of our business at that time was really the old traditional stockbroker business, where we have clients over the phone and we transact with them on that manner, right? So fast forward a little bit further, what we did was we separated the business into two pieces: the old over the phone business and the proprietary trading desk, where we traded the Philippines and Hong Kong. All right. In 1999, we spun off a company called CitySec Online. So we were City Securities. We created an online business, which was CitySec Online, which now is known as COL Financial. Right. So what we did during that period was we split off our brokerage business and the proprietary trading desk. All of the brokerage business, we decided it's something that wasn't going to be our core competency, and we put that all in COL Financial. Right. And in 2006, COL Financial was listed on the Philippine SME board. Okay. So COL, I'm sure you guys are familiar with today. In 2013, we created a school. So if you talk to our chairman and founder, Boss Edward, he has a few dreams of his that were really put into place, right? So one is to be able to grow the capital markets for the mass market here in the Philippines. So that is what COL Financial is, right? The second was to build a trading school, and this was the Kilum Trading Institute. So the Kilum Trading Institute offers 8-week recruitment courses that we did twice a year since 2013. We stopped at the beginning of the pandemic, and what ended up happening was this was our recruiting pool. This is where we were able to hire all of the traders that went through us, and we felt that had the ability to be able to do well in trading global markets. This is where we were hiring, and as of today, 60% of our trading team actually are graduates from the Kilum Trading Institute. So the Kilum Trading Institute teachers are all traders from CTS Global. So all of them are market practitioners and have the experience and nuance of being able to participate in markets firsthand. In 2020, during the pandemic, something really changed. And the biggest one was really the overhead costs. So what we did was we closed our physical trading floor as well as the school. It was a facility here in Tectite that we closed down. And because of that, we were really able to cut costs on that front. And more importantly, what ended up happening was that there was a huge shift in terms of our business strategy, because the traders had to work from home. And when you had to work from home, there were a lot of things that we had to turn digital. So what ended up happening is we saved on costs in terms of the physical office. Our office ended up being Zoom. So everything is recorded. In 2019, luckily, we were able to put together and spend for a trader database that ended up being the backbone of our entire trading data analytics and risk management platform. So we were grateful that we were able to put that into place prior to the pandemic. So when we had to move everything online, everything really took off, and we were grateful for that. And what ended up happening was, because the traders didn't have to be physically at the office anymore at 8 in the morning, there was a really big shift towards focusing on trading global markets. So we've been trading the global markets for several years already. And the difficulty was, if you had to stay up the entire night, and then you had to physically be at the office again the following morning, it was really difficult for the physical toll, and it was really incredibly taxing for the trader. And because of that, what ended up happening was, when you had to work from home, you could spend all your time sleeping in the morning because you didn't have to physically be at the office. You just be there digitally, right? And it really gave a huge relief to all of the traders and allowed them to be able to focus on wherever the money flow would be worldwide. So whether it was in the US in the first 9 months of the year in 2020, or it was in the Philippines in the latter half of that year, wherever the money flow was, the traders would be able to manage because they had time on their hands. It was a big deal. We also shifted to digital trader development, which what we realized at that time was that when we were doing one-on-one sessions with an individual trader, in the past, I would help one trader. But what ended up happening was, because everything is being recorded, everything is being uploaded to YouTube, not just one person was benefiting. All 30 individuals who ended up watching the video would all benefit from all of the trader development. And it really fast-tracked our trader development, which we are very thankful for as well. So the ability for us to be able to digitize our platforms really allowed us to be able to capitalize on markets. All right. So this is a timeline of what our company really looked like. All right. So next slide, please. All right. So we have 4 business units. Well, actually 3 plus 1 that we want to develop. Right. So the first one is our proprietary trading division. It's about 30 traders. We trade different markets: Hong Kong, US, Japan, and the Philippines. And it's a trading system that we built over the past 40 years. Me personally, I've been trading for over 20 years, and it's something that, in terms of allowing us to be able to have the experience and the tools and structure them in a manner that we can share with other individuals and other traders, and even through our school. And we believe that this is actually a short-term trading model, right? So something that to note is that the reason why we shifted to a huge and the bulk of our profits are from the short-term trading is because it carries the least amount of risk. So we are able to be in and out of markets as much as we can without having to take the excess amount of risk of carrying positions into difficult territory. Okay, so if you're looking at the second one, this is our brokerage services. This is a very small part of our business, and one that isn't going to be a priority, but we have to make sure that it's here. Okay. The third one, investment income, is these are our forms of diversification in terms of how we participate in markets. So the first one, which is our macroeconomic desk, is a really top-down approach, looking at how the overall market money flow is really working. So if you're looking, this primarily focuses on currencies, commodities, interest rates, essentially any form of money flow, wherever it may be, allows us to be able to be guided and allow us to be able to allow the traders to focus in specific markets where the heavy activity is. So that's really our goal, is to be able to find out where the money flow is all over the world and capitalize on that, right? So that's our macro desk. Our macro desk is also our defensive position. So in the event markets are in a difficult position and coming down, the macro desk is the one that allows us to be able to be guided, not just guided, but also participate on downturns of markets. Okay, so that's the macro desk. It looks at things in a significantly larger time frame than the general short-term proprietary trading division. So the proprietary trading division looks at things from days to a week, maybe, so to several days. The macro desk looks at things in a significantly larger time frame. Okay. The research team, so this is a team that focuses on bottom-up alpha. So the first thing that the first role of this team is really to guide the individual traders in terms of which individual alpha stocks they should be participating all over the world. So you've got thousands of issues that are listed in the S&P 500 in the US, and because of that, what we have to do is we have to have a team that allows us to be able to see which are the best of those companies. So that's our research team, and what they do is that they look at things and try to capitalize on them in a longer term manner. So you're talking about weeks to months in terms of holding period for this group. So when markets are turning from the downward swing, allowing them to be there and understand which issues are of great value and have great narratives, those are the ones that are going to be capitalizing on it. All right, so that's our form of diversification. We have two investment income teams that allow us to be able to hold things in a little bit of a longer time frame, but the bulk of the business is really for short-term trading and allowing us to be able to take the least amount of risk. Okay. The fourth one and the last one is our client accounts advisory business that we want to be able to build, right? So this is something that moving forward down the road, something that we feel that we can give added value to our potential customers. And this is something where we allocate a little bit of funds in order for us to participate on this in that manner. All right, so next slide, please. All right, so I want to take a little bit of time to talk about our mission and vision here. And really, when we were building CTS Global, the first thing that we really wanted to focus on is the culture of the organization. We were not going to be able to build an organization unless the underlying individual values of the team were really aligned. And that's where it started, and that's where we put in the word uplift. If you look at our logo here, you will see that it's a bunch of arrows, right, heading higher, and everyone looks at it just like it's charts. But the reality is that this is something where the red arrow at the very top over here is God blessing us and allowing us to be able to do the things that we do, allowing us to have the skills and the capability to capitalize on opportunities in global markets. And we feel that it's our responsibility because of that to be able to give back to the community. So the second set of arrows, the dark blue arrows, is us as CTS Global, and the light blue one is the society and our community and the people around us and the capital markets and everybody else who we feel we can uplift the lives of. And we feel that we have a capability of educating. We have an ability to be able to share our ability to make money in global markets, and whoever wants to listen, we will do our best to be able to give as much as we can. And that's something that this is really the vision that we have, especially me, I have to be able to uplift the world-class Filipino talent into the global trading arena. And I feel that the trading community, you guys know who you are, the trading community of the Philippines is a fantastic community. And there's so much talent here. And this is something that we feel that we can bridge this talent and show the rest of the world that we as Filipinos are amazing traders. And that's our mission. We want to establish the Philippines as the lead proprietary trading hub in the world. You know, we don't even have to be outside. We can be here in the Philippines and we can show the rest of the world the talent that the Filipinos have. And we can educate, we have the ability to educate and uplift these individuals, right? So yeah, next slide, please. Just a breakdown of our ownership structure. Pre-offer, 4 key partners, Edward Lee, Alexander Yu, Hernan Lim, and Raymond Yu, comprise of about 68% of the pie pre-offer. Post-offer, there's no secondary shares that will be sold. All of the shares will be primary shares. And post-offer, the four partners, Edward Lee, Alexander Yu, Hernan Lim, and Raymond Yu, will comprise of about 50% of the pie. All right. So, yeah, next slide, please. Next slide. So just a few competitive strengths of the organization and talk to you guys about how we make money. All right, so next slide, please. So at the heart of CTS Global is really the framework. That's the one here on the top right of your screen. And that talks about FTSR. FTSR stands for Fundamentals, Technicals, Sentiment, and Risk Management. So this is something that we really put together for the Killam Trading Institute. And I would truly feel that, not truly feel, every single individual trader that is a part of our team has to follow this framework, non-negotiable. And a lot of people say you're either in one camp or the other. So you're either in the fundamentals camp or the technical analysis camp. For us, you have to be both. And that's a non-negotiable, right? So it's something that we really stress to all of our students, stress to our entire team. And because of this, it allows us to be able to monitor and allow us to develop traders significantly faster. So the entire timeline here is a timetable of how long it takes generally to be able to make a trader. So before, it took us years, as in years, to be able to make a trader. Now, we've significantly cut it down. So anywhere from 18 to 24 months, we have a trader that is already profitable. And we're very excited about this because the reason why it's so hard to even shorten this, we would obviously like to have it shortened even further. But the reason why it's so hard to shorten it is because if you look at the markets, every year and a half, there's a significant sell-off in markets. And because of that, the trader has to experience firsthand what it means to be able to be sitting in those environments. So we as an individuals who have the experience of these environments can share it all we want, but if an individual trader hasn't firsthand experienced it, it's incredibly difficult for them to understand what we're talking about, right? So they have to see it firsthand, they have to get the experience under the belt, and that's why it takes anywhere from 18 to 24 months for them to go through any mini cycle of the markets. Right, so we're very excited for it because we've been able to shorten it, and we are in a position where we feel like we could really replicate traders significantly. All right, so next slide, please. This is our current team. Obviously, the face that you probably know here is Mr. Edward Lee. He is the chairman and founder of COL Financial, of the Killam Trading Institute, and of CTS Global. He's been trading markets forever, right? And he's been a significant pioneer in terms of growing the capital markets here in our country. Me, I'm the CEO. I've been trading for over 20 years. I've been managing the entire trading division since 2008. And all of the traders that have gone through it, the ones that are with me, have gone through me firsthand in terms of trader development and working with them and growing with them on that front. Alexander Yu is the vice chairman also of COL Financial, as well as CTS Global. Catherine Ong is the chief operating officer for CTS Global. She is also an SVP at COL Financial. And Edmund Lee is our CFO, and he is the president and CEO of the Killam Trading Institute. The six guys at the bottom, Mr. Jason Mariposa, Mr. Chad Pacheco, Terrence Chan, Brian Gomez, and Leonard Chua, and Mr. JC Aquino. These individuals are my senior traders. They've been with me for over 10 years already, and they're continuously, these are some of the best traders in the entire country. So they're the ones leading the charge in terms of continuing to build our trading team. All right, so next slide, please. All right, so I want to highlight risk management, risk management, risk management. And even at the base of our framework, it's risk management. We're a risk first, profit second organization. We are not allowed to lose money. And it starts with what we call the VAR methodology. We teach this as CALUM, and all traders are required to trade using this methodology. VAR stands for value at risk. And at any given point in time, each trader needs to know the dollar value that is being put at risk at any given point in time, non-negotiable. If you don't know, you can't trade. And this is something that we have implemented on the team. And this is something that if you don't follow suit, we got to pull you out. Second is that we have risk platforms that we have put into place. So first one is our trader management system. This allows the traders to be able to do all of the risk protocols, all of the review, and all of the data analytics that is necessary in order for them to be able to monitor their performances. All of this is, we spent for it, all of this is proprietary, and all of this is the backbone of the risk process of our organization. We have an IB risk platform, which is our global trading. So we work with interactive brokers in the global markets. And we do have a risk platform that we can allows us to monitor all trades and transactions that go through every single trader. And the Philippine monitoring tool. So our local monitoring tool that is allows us to be able to see all of the transactions as well as measuring exposure for our entire team and the individual traders. We have real-time risk monitoring. This is something that we're very proud of. I have a team dedicated just on watching over the traders. And this was necessary because sometimes the traders will get compromised, and we know that. But we also have tools to be able to make sure that they are at any given point in time in a slump, in having difficulty, we can see them immediately. So we have give back monitoring. So in case they are making money and are giving back, we have tools for that. We have drawdown monitoring in case they are losing money. So for us, in case a trader is down 3% at any given point in time, we freeze them, pull them out of the water, make sure we do the reviews first and make sure that they're not compromised before we allow them to trade again. So this is non-negotiable. The traders are not allowed to lose money. We have portfolio exposure monitoring at any given point in time. If there is concentrated positions, especially in the Philippines, sometimes there can be excess exposure in a specific stock. We have to make sure we know so we can cap it. Liquidity caps in case that specific trader is participating in an illiquid issue, especially in the Philippines again. We have to make sure that we limit the amount of exposure that these guys are putting into any, because sometimes there are multiple traders. So we have to make sure that as a house, as an aggregate house, we know that we can cap these limits. End of day updates, obviously we have to know what happens to them on an end of day. So we have real-time and end of day updates, and we have significant mover updates in case an individual stock is going up significantly and a trader has not taken any money off the table. We also have to make sure we know. All right. We have regular reviews, we have monthly reviews, quarterly reviews, and annual reviews. All of them are all going through Zoom today, all of them recorded, and allows our team to continue to learn from one another as much as we can. All right, so I want to talk about this chart, and I want to highlight this chart on the right. This is a performance chart of every single month since 2015, and allowing us to be able to highlight whether or not we are in a position where a specific month can make an X amount of money. And we monitor this very closely. If you look at this, I'm going to draw a box around these two bars, right? So the red bar and the green bar, this represents where the bulk of our periods really are, and then rightfully so. These periods are either a month where we lost a little bit, so lost under 1%, or made money a little under 1% as well, right? And this is par for the course because sometimes the markets don't really give an ability for us to make an excess amount, right? So what we do is that these periods up to this area is normal par for the course. There are periods where there were 5 periods where we lost up to 2%, which is on the border of being unacceptable, but it can happen, which we're okay with. And then there are 14 periods that we can move from 1 to 2%, which we are obviously happy with at that point, right? Because all of this is right skewed. We want to be able to skew as many of our trades towards the right side of the chart. This is something that's very important. Now, there are 2 bars here that flow into the unacceptable territory, where these are months where we lost more than 2%. So we have one that is a month that we lost from 2 to 3%, and we have a month that we lost greater than 3%. And in our terms, this is unacceptable. So what I did was I had to review why these months actually happened. And I figured out why. It's because these months were months that followed the 2 months that were on the right side. The reason for that was these are stocks, because what we do is we put everything mark to market. Wherever the market closed, that is our starting point for the following month. This one period that we lost greater than 3%, that period was the month following a period where we made over 10% the prior month. It was a give back from the prior month's move, which was up 10%. So both periods were periods that happened right after significant up move months. So I had to make sure why these numbers happen, because these are non-negotiable for us. So these were carryover from the prior month where these positions were significantly ahead. Okay. So I want to highlight the right skewed portion. Obviously, these are periods that are returned greater than 2 months. We have 6, 6, 5, 5, and obviously 6 at the very end. We're very happy with this performance, and we want to make sure that we can continue to allow ourselves to capitalize on markets in this manner. All right, so this is about 25 periods, if I'm not mistaken, if my math is correct, about 25 months out of the total that we have been able to return greater than 2%, which we're very proud of. Okay. All right. Next slide, please. Okay, so this slide just represents our performance versus the rest of the market. I want to highlight the gray line. So the gray line is the S&P 500 since 2015. The yellow line is the PSE since 2015. So if you'll notice the yellow line, the PSE actually lost money since the start of 2015, unfortunately, right? The black line is a benchmark between the two. In 2020, the performance of CTS Global was 50% attributed to the global market and 50% attributed to the Philippines. That's why what we did was we used the benchmark between the two as 50-50. And the red line is our performance over the same period. And the one thing I really want to highlight here is that if you look at these periods here, where the market sold off significantly, excuse my, these periods here, where the market sold off significantly, you'll notice that all of those periods, our performance was flat. The primary reason for this is because we know how to step aside. And we use that as a point for us to be able to capitalize on buying issues at significantly greater values. The biggest differentiator between CTS Global and a lot of other funds is that because all of our funds are proprietary, which means that there are personal funds of the organization, we don't have a mandate in terms of our minimum required allocation and deployment in the market. We can go to zero. We have a defensive cash position where if there's a problem at any given point in time, since we're short-term traders, we can go to cash and we have zero risk at that point. And that's an edge that we feel we want to be able to continue to capitalize on, right? Because if we step aside, you'll notice all of the periods right after there's a takeoff. Right after the market sell off, our performance immediately takes off. So the reality is that every time there's a market sell off, we're actually really excited because this is one of the times that we are at our best. Being able to purchase issues at significantly steeper discounts to where it was in the prior periods. Okay, next slide, please. I want to talk about our school and this is something I stress this a lot in our partnership with the Killam Trading Institute. Obviously, we're the same people, but we're very proud of our school. We feel that the school has been able to really churn out some fantastic traders, not just the ones that work for us, but even the ones that are outside. We really want to be able to do our best to continue to educate and to teach. And one, obviously, the primary reason is to give to our community. We feel like our community, the country, our society really has the talent. And if we can continue to give to and educate the investing public about short-term trading and being able to make money in the short term, that really grows our capital markets, allows us to be able to continue to not just focus on the mass market like what COL is doing, but also for the short-term active traders that want to make money, that allow us to get in and out of markets and capitalize on surges of the market. And active trading is something that we're very excited about, and we want to continue to educate. So that's the primary reason why we do this at Killam. But second, and more the byproduct of it was that because we educate and we teach, we are held accountable. So when we're teaching, we can't just say whatever we want without any accountability to the investing public. When we say something, we have to be able to make sure that we ourselves are willing to be putting our own money and trading these issues ourselves. It's not something where we just say whatever we want, right? So we're held accountable to our students, to the Killam online community, and whoever else is listening and watching, that whatever we say, we have to be held accountable to it. And that allows us to level up. Really allowed our trading team to grow since 2013. It is no coincidence that the performance of all of the coaches at the Killam Trading Institute all skyrocket in terms of their returns. No coincidence. So we're very proud of the way that our school has been able to hold us accountable and allow us to grow. So this is something we're continuing to do, and we will continue to hopefully open up soon. Okay. I just want to highlight the CTS internship program, which we have been doing since 2012. I do see some of our interns in the room right now. And this is something where, remember, this is our scouting ground. Both the Killam Trading Institute and the internship program are our ability for us to scout next potential talents. Last year, our internship program had 700 applicants, 400 of which joined our Facebook group, 24 of which worked with us firsthand. One we hired, and hopefully we'll continue to hire moving forward. We have the internship program again this year. So if you guys are interested to apply, it's there. All right. So these are our ways to give back, but this is our way for also us to scout and develop and be able to see the talent and work with them before we bring them onto the team. Okay. Next slide, please. Yeah. So our longstanding partnership with COL Financial. Obviously, we have the same chairman and founder. They've been spearheading the growth of capital markets in our country since 1999, 2006, when they listed. They're the leading and fastest online broker, and we have a fantastic relationship with them. Thank you for them for helping us distribute as well the links to our event today. And because of their clientele base and growth, we hope that we can continue to work with them, especially for our third-party advisory business in the future. Okay, so next slide, please. So just a breakdown in terms of our revenues over the past since 2015. On the left-hand chart, you can see that the blue area is our global trading revenues. And it was no coincidence that in 2020, when we went into the pandemic, that there was a huge surge towards making the pie 50-50 in terms of our global trading revenues and our Philippine trading revenues. And it's something that we want to continue to really maintain. And we feel like, especially moving forward, we hopefully will be able to grow this towards closer to 70-30, right? The primary reason is because the opportunities and liquidity is so much more prevalent in the global markets. You're talking about over thousands of stocks listed in the US markets, as well as Japan and in Hong Kong, right? So there's so many choices, and it allows us to be able to chase money all over the world. And in terms of the deployment, obviously in the Philippines, it's going to be harder for us to scale our deployment, but in the global markets, we're a small fry compared to everybody else. And this way it's so exciting, right? On the right-hand side is our operating expenses versus our trading gains. So you will also notice that in 2019 to 2020, there was a big jump in terms of our trading gains, right? Our operating expenses dropped because we did close the office that we were being housed in since 2013. One thing to note, I think that Edmund will go through this extensively later on, is that we had an additional paid up capital of 300 million in 2019. That allowed us to be able to have the proper ammunition to capitalize on markets moving forward, right? And I think Edmund will talk about that in significant, to a more extensive degree later on. Right. So first 9 months, 2020 to 2021, we went from about 80 to about 90 million in between the two different periods. Okay, so next slide, please. All right, so some key risk factors that a lot of people continue to highlight and definitely have to have it. We've definitely put importance to. The first one is it's obvious that the nature of the markets are incredibly cyclical and volatile. Yes, it's true. And that's why for us, risk management is of utmost importance. No way we are able to have the performance that we do without our risk management infrastructure. Not a chance. And our risk management infrastructure has been in place for over the past 10 years and continues to be honed and improved and continue to make the proper adjustments to be able to make it as best as we can. All right, and it's seen in terms of our consistent outperformance of the firm versus the benchmarks, which we showed you in the prior slide. Technological risk from the stock brokerage platforms. Connectivity interruption and cybersecurity breach. We use 3 different brokers for execution in different markets. So we use COL. One of the platforms we use is COL HK alongside Interactive Brokers, and we are opening one with another broker as well to make sure that we diversify on that front. We have to make sure that we have backup facilities and backup internet connections here at the office, and especially for the traders. They also have multiple different ways to access all of the trading platforms. And of course, platform exclusivity, which does not require external connection. We have to make sure that we have hard line to the exchange, especially for the Philippines. Right. So Forex risk, number 3, for dollar denominated working capital requirements. I know this is something that was highlighted in terms of the past few because of the peso has been volatile, and we do have significant funds outside, right? But it's something, and one of our independent directors is familiar with participation in regards to foreign exchange currency. We've spoken to him and we've asked for his advice and guidance on that front. And we've decided that it's more important for us to capitalize on it based off of our macro fund instead of hedging, because what ended up happening for those based off of that independent director's experience was that hedging ended up actually taking on a significant amount of risk instead of protecting the current value. So what we plan on doing moving forward is we'll be able to manage based off of the macro fund and allow us to capitalize on the currency moves as well. All right. So exposure to political and economic factors that are relevant to markets. We do have significantly diverse trading sets of strategies, right? So which have low correlation to each other. So that's really good, allowing us to diversify on that front. So we monitor and analyze all country-specific developments or trends. So there was a question earlier about Russia and our participation in Russia. Actually, we saw there were already significant signs of issues with Russia. We made sure that we had no exposure to that during that period, right? So it's something that we all monitor, whatever is happening all over the world. And because sometimes if there's something happening in one side of the world, there might be a way to capitalize on it. Example, so with Russia, oil prices and commodity prices started to skyrocket, and we as an organization wanted to make sure that we want to see if we can capitalize on those opportunities. Okay, next slide, please. Exposure to risk investments in international markets. All of our investments are protected by foreign laws, so that's something that we have to make sure that we want to make sure we're protected as well, right? Unavailability of specific talents and employee turnover. First of all, we have a partnership with Killam Trading Institute. It's something that we will be doing. You know, Killam's so important and integral in terms of our scouting, right? We're not afraid that we're going to run out of traders, because one, we can develop them, and second is that there's a huge trading community here in our country, and there's so much talent that is present, and we want to see if we can continue to tap it. So we have that with Killam, we have that with the CTS Global Internship Program, which we are going to have as well this June. And prioritization of the trader development and employee engagement. You have to remember that each of the traders is like a store, and we have to make sure we take care of the store as much as we can. So the traders benefit tremendously because of our infrastructure and the support that we give them. And we have to make sure that we grow together and are held accountable for one another, right? So that's something that we're very excited about, because we have great relationship with all of our traders. Deviation from the framework. We have real-time monitoring from management. I know all of the traders, how they trade, and if there's any deviation. If there's any deviation whatsoever, we pull them aside and we have to talk to them. And if things don't work out, unfortunately, I have let traders go before for deviation, right? So that's something that we're very strict on. And we have regular trading reviews and performance analysis, right? So this happens monthly and sometimes even bi-weekly. So I make sure to check up on all the traders and make sure everyone's doing and is in the best state, mental, physical, emotional state possible to be able to capitalize on markets. Inability of traders to improve efficiency and scaling global trading operations. This is why we have to shift a lot of what we do to the global markets. We really feel that there's a huge opportunity that's being untapped in the global markets, and allowing us to be able to raise funds to be able to tap that is something that we want. It was a priority of ours, and we feel like there's so much opportunity all over the world. And we're such a still a small operation in comparison to everybody else. I mean, if you compare the Philippines, which trades about $100 million or so every single day, just to give you context, Facebook trades that in an hour every night. That doesn't count the rest of the market, right? So we're so small in comparison to the rest of the world. So there's so much opportunity there. Okay, next slide, please. Failure to execute future strategic plans. We've been planning this IPO for the past 5 to 6 years already, working, structuring, making sure that we do what we need to do and put the proper people into place and hold the certain individuals accountable in order for us to get ourselves to this point. And that's not going to change. We feel like we spend a lot of time in terms of preparation whenever we want to be able to do something. And we're excited for it because everything's planned out. And the second one is leveraging on COL Financial's incredible track record. You know, I can't say enough great things about COL and how they manage their current clients. So we feel like it's something that would hopefully be something that we could work with in the future. All right. Power, internet connectivity, interruption, cybersecurity breach for electronically executed global trading operations. The nice thing about the global markets is that we have obviously stop loss orders and all of those facilities outside, right? So that's something that we're thankful for. Use of UPS for all our servers here and backup internet lines as well. And we do have proprietary systems that are exclusive to CTS that allow us to be able to enter orders if necessary. Okay. Potential local and foreign-based competition. The equity markets operate with an abundance principle, allowing innumerable market participants to all benefit from markets and generate profitable returns. In other words, we're not really competing against anybody else. We're really competing against ourselves and the ability for us to continue to perform. We're not worried about other people who are competing because we also want them to do well. We want our entire capital market to grow, and we can all grow together. There's more than enough participants can you just imagine that we're only a little over 1 million participants in our country. That's under 1% of our population that's participating in the market today. Whereas other countries in the region, anywhere from 15 to 25% of their population participate in the stock market. We're so small. There's so much for us to all benefit from. And we want to be able to help one another continue to grow this capital market. Okay, so next slide, please. Company can be perceived to have potential conflict of interest with COL Financial as both the brokerage segment and clients account management segment. So first and foremost, we're not in competition with one another. We don't plan on competing against one another. The first one is that our focus is the global markets. Their focus is the Philippines. They have a core competency in the Philippines. That's what they're good at. We want to continue to support them on that front. We're not in the customer management business for the Philippines. In actuality, we have given all our customers to COL Financial. We want to give the customers to them. The reason why the other customers are still with us is because those are our old traditional customers that really just want to talk to our specific brokers on the phone. There's a few of them. And the second is in terms of the client management and advisory business. Our core competence is the global markets. And that's what our focus is. And we'll continue to focus on, right? Institution of China walls between planned client account management segment and the proprietary trading desk. Yes, they're completely two different segments. And there is definitely a China wall between our brokers and the proprietary trading desk. Okay. Company may be exposed to risk on related party transactions. We have an existing policy right now where transactions between the company and its related parties must be at arm's length prices on terms of those offered to non-related parties in an economically comparable market. All of these things are incredibly important to us, and we have to make sure that we have the trust of our customers and of our shareholders on that front. Okay. Company may be exposed to risk on non-compliance with RBCA ratios. Okay, so we've always been compliant, and actually the RBCA is something that has really put a cap on our ability to make money in markets. And this is part of the reason why we're raising capital, because allowing us to raise the capital lifts our RBCA profile, allowing us to be able to capitalize when the markets are giving ample opportunities. So it's something that we are very excited, especially we're going into the listing, because it gives a huge relief to our traders to now that they can deploy the capital and they can stretch their arms a little bit, because we're incredibly cramped in terms of our deployment when the markets are going up, because there's a cap in our RBCA. But we'll continue to monitor and we'll endeavor to comply with the applicable regulations. Obviously, we have to comply, right? This is something that we've been compliant in the past and will continue to be compliant in the future. All right, next slide, please. All right, so just to wrap things up, we have a core strength of trading equities, and this will always be at the forefront. We have there are no plans to go into other forms of investment vehicles, whatever they may be, whatever other assets, whether it's crypto or not. Those things are not, again, those things are not in our radar. We don't plan on going into that space. And what we do is we capitalize on our core competency, which is trading equities and stocks. We want to continue trader development. Our real plan is to really grow our team. We have 30 some odd traders. We want to see how much we can push this in terms of hiring and allowing us to be able to educate the capital markets, in turn allowing us to scout, because we're educating, we scout, we work with them, we bring them on the team, and we continue to do it over and over again. We continue to trade with a more global focus. It's going to be a priority for us moving forward. Hopefully we can push it to 70% of our operations, especially after we list. Maintain a lean cost structure. We don't plan, the cost of a trader is not significant, but the ability for them to scale is so huge. That really excites us on that front. Continue implementation of risk management infrastructure, non-negotiable, risk first, profit second. Always has been, always will be. Okay, and we want to hopefully be able to launch our global account advisory business moving forward as well. So that's the next stage for CTS Global, even if it's something that we're still continuing to develop at this period. All right, so next slide, please. All right, so with that, I'm going to turn it over to Edmund. So he's going to share with you guys regarding our financial highlights. Thank you, Edmund.
Okay, thank you, Lawrence. Before I begin, there's really three things that I want everybody to understand. The first part is that we're really an asset-light business. So we rely on our people more than anything else. Number two is that with the financial highlights I'm going to show is that I want you guys to take a look on the impact of additional capital to our business. And basically the reason why we are raising this 1.39 billion in capital. And the third part is because of our cost structure. And I want you guys to take a look and how lean we are, and so that you guys can be able to visualize how we will achieve that high operating leverage. Next slide, please. So if you take a look at our assets, we've probably been flat. We've been flat the last 3 years from 2019 to 2021. We're very asset light, around 850 million in terms of assets. But if you look at our equity, it's the equity portion that's actually grown over the last 2 years. Our business and our profitability, like what you guys have seen in our financial statements, we've been profitable from 2020 and the first 9 months of 2021. That has reflected in our equity part of the business. One thing you'll notice that our liabilities have gone down, and the major reason is because we shut down our office in March of 2020 due to the pandemic. And I'll also show you how much in terms of cost savings that we've incurred. Next slide, please. Okay, I think this is really the meat of the financial highlights. And you'll notice from 2018 and 2019, we've averaged around 50 million pesos in terms of trading revenues. And basically that ballooned to 172 million pesos in 2020. Okay. The big reason here is because of the additional capital that we injected at the end of 2019, and that was reflected in 2020. You'll notice on the right side of this chart, our capital stock was 200 million for both 2018 and 2019. And when we injected that additional 300 million, we ballooned to 500 million. But if you look at in terms of performance, our returns were nothing out of the ordinary. Yes, it was so much better, but you'll notice that our returns over the capital stock was 27%, 23%, and 34% for 2020. Since 2015, the firm has averaged 22.9% CAGR per year, right? So although 34% is a fantastic year for us, the big reason why we had that 267% jump in revenues was really because we had a larger capital base. And that's the reason why, you guys can figure out, if we can average, our goal really is just to average 20% per year. You can do the math. If you increase our capital stock base from 550 million with another 1.3 billion, and then you guys can probably do the math on that end and probably imagine what type of business what we have right now. Okay. Last part, next slide, really is on our operating expenses. So if you remember, if you take a look at the previous slide, we averaged around 50 million in terms of revenues, trading revenues in 2018 and 2019. Our operating expenses is actually around 35 to 40 million pesos per year on the operating expenses, which is on the right hand side of the chart. That's really how much we plan to be, I mean, that this is really how much we plan on spending every single year in terms of operating expenses. Like what Lauren said, I mean, the cost of a trader is very cheap. In fact, in 2020, even though our revenues went up 250%, our operating expenses actually declined from 36 million to 31 million. And the reason why, it's because we did close down the office in March of 2020. So going forward, we really don't see any surprise that will happen in terms of operating expenses on our end. We really believe that intellectual property and human capital is really key to our business, and not really on spending more in terms of machinery and whatsoever. And that's the reason why we're very excited for our business. I think that's pretty much it. If you take a look at our cost of sales and gross profit, on a normalized basis, you'll probably see our gross profit around 60% margins. So I mean, just to summarize these three categories, we're raising the 1.39 billion to really beef our capital base. You guys can probably do the math on type of trading revenues we can probably incur per year. That will pretty much give you your revenues for the entire year. Scaling for us isn't an issue. One thing that has been a big hindrance to us, on the next slide, please, is our RBCA. So what is RBCA? Think of it this way. We can only deploy up to 120% in terms of equity versus our capital base. So give or take, if we have 500 million in a capital stock, which I've shown you a while ago, we can only deploy up to 600 million in terms of equity. So Edmund, you look at our RBCA, you're always in compliant anyway, right? And that's true. And the reality is, because during the good times where we're seeing that bull market, for example, in the early parts of this year for the Philippines, this is really a big roadblock for us. It's because we're deploying a lot of monies, especially in the early stages of that big move, right? So the reason why you'll start to see huge ratios for our RBCA is because usually at the end of the period, which is the end of the year, we zero out all our positions, and that's the reason why our RBCA ballooned from 664% to 2,300%. But don't get us wrong. I think what's key for us is that as we beef up our capital base to 1.9 billion, then obviously it gives us a lot more leeway when it comes to better market. This has actually been a big hindrance, and that's the reason why we're excited for our business. Again, our trader count as of today is around 32. So that's why the school is very vital to our business, and hopefully we can have it reopen soon enough. And the last part I'd like to highlight here is our net liquid capital. We've grown from 159 million plus the 300 million injected in end of November, plus another 50 million in 2021. And basically our net liquid capital as of today is 545 million pesos. Okay. Next slide. And that's pretty much it. We don't have a dividend policy as of today. But our goal is to issue 20%. We're having a dividend policy of 20% of our audited net income after tax of the previous year. Next slide. So this is just going to be a summary of the use of proceeds. Next slide, please. And majority of the proceeds will largely be for expanding our global trading operations. We estimate approximately 1.23 billion will be allocated for global trading operations. 20 million, like what Lawrence mentioned about starting our client account management and that expansion in that part of the business. And last part is around 100 million for general corporate purposes, which we expect to disperse by 3Q of 2022. Next slide. So that's pretty much I have to present for our financial results. I'll pass it on to Daisy for the terms of the offer. Daisy.
Okay, thank you, Edmund. Good afternoon, everyone. As to the terms of the offer, here are the parties to the transaction. Issuer is CTS Global Equity. The sole issue manager, underwriter, and book runner is SB Capital Investment Corporation. Selling agents for the issue would be the PSE trading participants. Legal counsels to the issuer are attorneys Sharon T. Lim and Stephanie Faye B. Reyes. Legal counsel to the issue manager, underwriter, and book runner is Stan Venturanza Valdez. Stock transfer agent for the issue is Professional Stock Transfer Inc. Receiving agent is Stock Transfer Service Inc. Escrow agent would be Security Bank Corporation, Trust, and Asset Management Group. Okay. As to the total issue size, it would be 1.375 billion pesos with total offer shares of 1,375,000,000 primary and new common shares with par value of 10 centavos. Final price per share is 1 peso. Institutional offer is 70% of the total issue size or 962,500,000 common shares. Trading participants' offer is 20% of the total issue size or 275 million common shares. Retail offer size or LSI is 10% of the total offer share or 137,500,000 common shares. Minimum subscription is only 1,000 offer shares and in multiples of 1,000 offer shares thereafter. Proceeds of the issue shall be, as mentioned earlier, shall be used for one, scaling of global trading operations. Second, client account management expansion. And third, for general corporate purposes. As to the indicative timetable, offer period starts today, March 29. PSE trading participants' commitment period starts March 29 and ends on March 31. Deadline of submission of firm order and commitments by PSE trading participants is on Thursday, March 31. LSI offer period starts today, March 29, and would end on Monday, April 4. Deadline for LSI submission of application, end of offer period, and payment date for LSI and PSE trading participants are all on April 4. Tentative listing date and commencement of trading on the PSE would be on April 13. Okay, back to you, Pam.
Thank you, Daisy. Okay, so that ends the presentation of the company and for the IPO. We will now entertain the questions because we've been receiving a number of it through the chat box. So thank you everybody for actively participating in today's discussion. We'll begin with this very interesting question. So could CTS Global be the next Berkshire Hathaway? I believe we have Mr. Edward Lee. Mr. Edward?
Yes, Pam.
Yeah, so the first question I think goes to you. Could CTS Global be the next Berkshire Hathaway?
Well, I think the concept is the same. No, the only difference is that Berkshire is basically investing businesses for the long term, while CTS Global is actively trading the businesses, the equities itself. No? But there's a cap. The capital that we have is the maximum. I mean, it doesn't go up and down. No? So we don't get new money in between. And very different business model, but the objective is the same. Try to grow consistently 12-15%. Berkshire is about 12 to 15% compounded over time. So hopefully we can achieve the same results.
Okay. So thank you for that. I think the next question is CTS is very reliant on its traders for success. How do you plan to retain talent and keep them from leaving?
Lawrence, you want to take that?
Lawrence?
Yeah, I'll take that one. You have to remember something, that our infrastructure is something where we're so dependent on multiple pieces. Before, it was a trader would do it by himself. All of the research, all of the trading, all of the risk management, all of the review, everything has to be done on an individual trader basis. There was no assistance, no help, no nothing. And if you're doing that by yourself, it's so difficult. It's so taxing. But that they would do it by themselves. Today, we have infrastructure. We have centralized research. We have centralized macro. We have centralized risk management. And all of the trader review is assisted. So being able to, if you want to leave, you have to do all of that by yourself again. And the compromise there is so significant. It's very hard to do that. I know that for a fact, because if I used to have to do it by myself. And that's why we had to make sure that we put these proper infrastructure in place so that all of the traders would have the support that they need in order for them to grow their business, right? So that one first and foremost. Second is all of the risk is on the part of the organization. If you have to do it by yourself, the risk is yours. And when you're trading your own funds, that's a different story altogether as well, right? So all of that, amongst all things, you mash that all together, you want to stay with us. A lot of traders want to stay in our infrastructure, and we want to do our best to support them as much as we can. And if they do because sometimes, especially when you do it by yourself, sometimes you can get emotionally compromised. You go on a losing streak, no one's there to pull you out of the water, nobody to talk to, nobody to review your trades with, no support system. It's hard. And that's why even here at Calum, we want to be able to build that community and grow that so that we have eyes on one another, hold each other accountable, help each other grow. Yeah, so we are happy with how we've been keeping our traders. A lot of our traders have stayed with us for several years already, and we feel like we can continue to do that moving forward.
Okay, thank you, Lawrence. I think the next question is something that we saw consistently. So the question is really, does this IPO have a stab fund? Is it correct that there's no stab fund in the prospectus? How would you protect the investors who trusted you? It might be another medic tragedy. Maybe Lawrence?
Yeah, we really believe that our CTS can stand on its own merits, right? And we're very confident the market really would be able to see us and understand that we're really worth this value, right? So we didn't feel like it was something that we needed to put in our that we needed to put up a stab fund for that front.
Okay, thank you. Next question is, do you focus on short-term trades or investing? What is the average time frame per trade?
Most of the traders focus on short-term trading. The reason primarily is because it takes the least amount of risk. Being able to go in and out of markets allow them to be able to manage their capital to the best of their ability without taking any excess risk. Also allows them to capitalize on day-to-day opportunities that the markets present, both here in the Philippines and globally, right? So I feel that that's incredibly important. And average time frame per trade normally the short-term ones will be sometimes even hours to a few days, normally in terms of exits. And we do have two different funds. So the macroeconomic desk and the investment desk, that the time frame, like I mentioned earlier, is a little bit longer. So you're talking about potentially weeks for an individual trade to materialize, right? So if the markets present themselves on that front, they can hold it for significantly longer, and they're designed to do that.
Okay. The next question is, which sectors of equities does CTS concentrate on the global equities? Maybe Edmund, you can take this.
Sorry, could you repeat that, Pam?
Sure. Which sectors of equities does CTS concentrate on in the global equities?
I think Lawrence answered this a while ago. I think Lawrence would probably give you a better answer for this.
Okay.
Yeah, it's really the focus, especially on our macro desk, allows us to be able to see different sectors all over the place, all over the world. So wherever the fund flow really presents itself, that's where we have to spend our time. So example, this last period during the Ukraine war, our focus was all on the commodity plays and defense, and as well as food security. So those specific sectors really jumped off the page in terms of primary beneficiaries of the war. So we spend our time wherever the beneficiaries are that's where we have to be. And we're very, very happy that our research team and macro desk guide us in the proper manner on that front. So it's not we can't pinpoint a specific sector that we would spend the bulk of our time. It's really where the present opportunity really is at any given point in time. And because we're short-term trading allows us the flexibility to be there.
Okay. We also have this question. According to one of the research reports given, the company is overpriced compared to Asian peers. Could you please explain this? Is this true or not?
Expensive is always relative. If you take a look at like the regional peers, and we did our regional peer average, most of everything that we took into consideration was from a price to book level. Post offering, we're probably looking at 3.3 times price to book. Regional average, once we did our initial assessment, was around 3 times. We really believe that we deserve our premium. I think that's what Lawrence already pointed out. We're very low expense, high operating leverage. We think the upside in this business is huge if we execute properly. Again, we're only looking for around 20% return per year. I think based on our historical results, we were able to achieve that. Going forward, I don't know, but hopefully we make that assumption. And yeah, I think that's what we're excited for our business.
Okay, thank you. Can you show your past 2 to 3 year performance analytics data for possible investors to evaluate?
Yeah,
Sure.
absolutely. Yeah,
Not a
actually, yeah. Can you pull it up? I want to talk about that a little bit. It's on the annex of our presentation.
It's actually not 2 to 3 years, but just to highlight first, we did 27% return for 2018, and we did 23%, and we did 34% from 2018 to 2020.
Okay.
Yeah, I just want to highlight this. Sorry, I put this here just to give you guys a point of perspective versus the benchmark, right? So benchmark is 50% S&P, 50% PSEI. So since 2015 to 2019, top line CAGR was 22%, almost 23% for CTS. S&P during the same period was 13.7. PSEI unfortunately was slightly under negative 0.7%, where the benchmark between the two was about a little under 7. But that's not what I really want to highlight. I think this is, I want to highlight this. If you look at this period, up months as a percent of total, we're about 70%. 7 out of 10 months we're profitable. So not too far from the S&P at 72%, and significantly ahead of the PSEI, which was around 50% during the same period. When you're talking about average return on the up months, I think this is something that we want to be able to highlight, is that when the period is up at any given point in time, S&P is up generally 3%, PSEI at about 3.5%. We're at a little under 3. So when you look at that, our objective really isn't to outpace the market when it's doing well. That's not our primary objective. Our primary objective is to stay, in terms of performance, if we can stay on track with what the performance of these markets when the markets are up. Reason for that is because, one, we don't expect to sell at the top. Okay, realistically, that's not our primary objective. Our primary objective is just to take as much as we can on the up moves. With regards to pyramiding, so we refer to it as pyramiding. As the markets are going up, we're dropping exposure, especially during those euphoric periods. So because of that, we can't expect that we can stay in terms of to outperform significantly when the periods are up. So the differentiator is this one here. This is the differentiator. Average loss on down months. So you will notice that CTS, we refuse to lose money, non-negotiable. If we draw down a little bit, we got to pull ourselves out of the water. And our average loss on a down month is 1%. The average loss on a down month for S&P is 4%. The average loss of the PSEI is 4%. That means that they lose 4 times more when they're wrong than we do, when the markets are down than we do. That's a pretty significant number, okay? That gives us what, because one of the ratios that we use is an edge ratio. And if you look at our edge ratio, that means average winning month over average losing period. The reason why this is important is because for every dollar that you lose when the month is down, how many more do you make when the month is up? And this is important to us. So for us, we make almost $3 or 3 pesos for every 1 peso that we lose. That's a pretty significant number for us. In comparison to S&P, they only make 70 centavos for every 1 peso that they lose, which is not such a great number. And the other one is Philippines is 0.9, right? So our max monthly return, 10%, versus the S&P is 12.7 and the PSEI is 9.3. And our max monthly loss, and I talked about this before, this 3.7 number, I had to review why that happened, was because it's mark to market from a carryover from the prior period, is 3.7 versus S&P, which can lose up to 12% in a period, and PSEI is huge 21% drawdown, which is obviously unacceptable. If you're going to lose 20% of your portfolio at any given point in time, let's not even do business anymore, right? So it's something that we make sure that we're not allowed to lose money, right?
Okay,
Yeah.
thank you. So I guess next question is, the relative performance of CTS says that $1 turned into $3.2 from 2015 to 9 months 2021. That's a 19% CAGR. Is this correct?
Yeah, that number was for the trading division. That was not inclusive of all the other trading that was done by our chairman. So that's why this number, the top line here is slightly larger.
Okay. Next question, are these traders in equal allocation? If so, what is the mean system drawdown of these traders using the framework?
Sorry, could you run that question again?
Are these traders in equal allocation? If so, what's the mean system drawdown of these traders using the framework?
Yeah, so the traders are not equal allocation. Obviously, there are some significantly more seasoned than others, and those individual traders are allocated significantly more than the younger traders, right? So we allocate based off of their capability and performance, but we do continuously encourage them to increase their bar to allow them to be comfortable managing significantly more funds, right? So that's something that we in terms of allocation, it's different per individual trader. So, but the drawdown system is the same. That means that if any trader is down 3% at any given month, we pull them out of the water. They can't trade, right? And we have to do a review. So all of them follow the same risk protocols, but their allocation is different.
Okay. Maybe just a couple more last few questions. Algorithmic trading accounts for around 60 to 73% of the overall US equity trading. Do you do algo trading as well?
No, we don't. All of this is human talent and skill, and there's a reason why. A lot of trading is based off of market psychology, understanding logic of price, understanding emotions, and capitalizing on it. And it can shift on a turn on a dime. And we're here to make money, not based off of order matching, not based off of just spreads. We're here to make money because we feel that there are opportunities and discrepancies in the price, and we can make good chunks on each and every move. So because of that, algo trading was never in the cards for us, and we feel that we can develop enough talent that we can continue to make money regardless of the algo trading.
Okay. I guess we can accommodate maybe one last question. May I ask if CTS Global is taking advantage of leverage trading on global markets or global trading are done only on a cash account?
Just to repeat, we have to comply with RBCA, which is 120% of total capital base. So like what I mentioned a while ago, if we have a capital base of 500 million, we're capped to deploy up to 600 million. So if that answers your question, basically we're capped. So there's really not much we can do.
Okay, so we are currently at 5:30 p.m. And that should that signals the end of our discussion for this afternoon. We do know that there are a couple of questions, and we'd like to thank the participants for actively participating in today's presentation. We do hope that the responses that were provided allowed you to see with greater detail the company and its potential, and we hope that the interest translates into this offer during our offer period. Before we close, we would just like to thank our panelists, Mr. Lawrence Lee, Mr. Edmund Lee, and of course, our chairman, Mr. Edward Lee, for generously answering to the questions, and also the other speakers for the presentation, Mr. Dennis Du, as well as Ms. Stacy Garcia. Before we end again, we'd like to call on our Senior Director of SB Capital to give us a closing remarks, Ms. Margot Lee.
Hi, good afternoon, everyone. On behalf of CTS Global and SB Capital, I'd like to thank you for attending this afternoon's briefing and for the very interactive Q&A session. I am Margot Lee, Senior Director of SB Capital. As you have seen, CTS Global is on the verge of scaling up its trading operations to participate more actively in both the local and global equity markets. This scaling up of its activities will enable it to better identify attractive opportunities, as well as diversify its holdings to better manage risks. Their trading model and risk management platform give them the tools to effectively manage their trades and provide stable return on equity. We hope we have convinced you to invest in this exciting company. As we said during the opening statement, these are very interesting times to live in, but these are also the times when opportunities present themselves. On behalf of CTS and SB Capital, we look forward to your support and participation on this IPO transaction of the company. Thank you and good afternoon to all. Stay safe.
Thank you all.
Thank you. Bye.
Thank you. Thank you. Have a great day.
Thank you.